GE Healthcare's latest earnings, a deep dive into growth, challenges, and future opportunities. Hey everyone, welcome back to the channel. Today, we're taking a deep dive into GE Healthcare's latest earnings report to see how this global medical technology leader is performing. How well is the company growing? What are the biggest opportunities and challenges ahead? And most importantly, what does it all mean for the future of the healthcare industry? Stick around as we break it all down in an easy-to-understand way. Let's start with the big picture. GE Healthcare reported total revenue of $5.32 billion for the fourth quarter of 2024. That's a 2% increase compared to the same period last year. While this was slightly below Wall Street's expectations of $5.33 billion, the company made up for it with stronger than expected earnings. Their adjusted earnings per share, or EPS, came in at $1.45. That's well above the forecasted $1.26. This tells us that even though revenue growth was moderate, the company is getting more efficient and profitable. Looking at the full year, GE Healthcare brought in a total of $19.74 billion, with organic growth of 1%. Now, 1% might not sound like a lot, but considering the economic uncertainty in global markets, this steady and resilient performance is actually a positive sign. And looking ahead, the company expects its organic revenue to grow by around 2 to 3% in 2025, while earnings per share are projected to fall between $4.61 to $4.75. These numbers suggest that while growth may not be rapid, profitability is expected to remain strong. Now, let's take a look at which areas of GE Healthcare are performing the best. One clear standout is their imaging division. This includes MRI scanners, CT machines, and ultrasound devices, essential tools in modern hospitals. Demand for advanced diagnostic equipment continues to rise, and GE Healthcare is leading the way with innovative technology. One great example is the Cigna Hero MRI system. This state-of-the-art scanner is designed to improve image quality and scanning speed, helping doctors diagnose conditions more accurately and efficiently. Another highlight is the Revolution Apex CT scanner, which uses artificial intelligence to automatically adjust scan settings and reduce radiation exposure. That means better safety for patients without compromising image quality. With advancements like these, GE Healthcare is strengthening its position as a leader in medical imaging, especially as artificial intelligence becomes a bigger part of healthcare. When we break things down by region, the North American market was a bright spot in the latest earnings report. Revenue in this region grew by 5%. As hospitals and healthcare systems in the U.S. continued investing in cutting-edge medical technology. However, the situation in China was more challenging. Revenue in the Chinese market dropped by 15%, and there were a couple of key reasons for this. First, China's overall economy has been slowing down, which has affected hospital budgets and purchasing decisions. Second, the Chinese government has introduced new policies on medical equipment procurement, which have made it harder for international companies like GE Healthcare to compete. Even with these headwinds, GE Healthcare is not backing away from China. Instead, the company is focusing on local partnerships and artificial intelligence-driven diagnostics to adapt to new market conditions and stay competitive in the long run. Of course, no company is without its challenges, and GE Healthcare is facing a few major ones. One big issue is global supply chain volatility. Producing high-tech medical devices requires a complex network of suppliers. Any disruptions in logistics or shortages of critical materials could slow down production and increase costs. Another challenge is increasing competition. GE Healthcare is up against some strong players like Siemens Healthineers and Philips. For example, Siemens recently launched a highly advanced AI-powered ultrasound device, while Philips is making major advancements in cardiovascular imaging technology. With competition heating up, GE Healthcare will need to keep pushing forward with innovation and investment to maintain its edge. Despite the challenges, there are also exciting opportunities ahead for GE Healthcare. One of the biggest trends is artificial intelligence in medical diagnostics. The company is investing over $1 billion each year into AI-driven medical imaging, which is making scans faster, smarter, and more precise. Another major opportunity is the rise of remote healthcare solutions. With telemedicine becoming more common, hospitals and clinics are looking for better imaging and monitoring technologies that allow doctors to diagnose patients from anywhere in the world. And let's not forget the global aging population. As more people get older, the demand for MRI and CT scans is expected to rise significantly, especially for conditions like cancer and cardiovascular diseases. This trend alone could be a major driver of long-term growth for GE Healthcare. So, what's the bottom line here? GE Healthcare is showing steady growth and improving profitability, all while making bold investments in artificial intelligence and next-generation medical technology. The company does face challenges, especially in China and from increasing competition, but its strategy of innovation and global expansion puts it in a strong position for the future. What do you think about GE Healthcare's future? Will AI-driven diagnostics and new technology help the company stay ahead? Let us know in the comments. And before you go, don't forget to like this video, subscribe to the channel, and turn on notifications so you don't miss our next deep dive into the world of business and healthcare technology. See you in the next video.